I'd like to thank everybody for joining me today. Today, I want to talk about long-term care planning. I think this is a big issue. It's a growing issue as we have an aging population, and more people are just going to need to, take into account this type of planning to incorporate into their retirement planning for those golden years. So as we talk about long-term care planning, I think it's best to make sure we have a good idea and understanding of what long-term care covers. If you look at it's care needed if you can no longer perform or need assistance with the most basic of daily routines. We call those activities of daily living. If you look at the activities of daily living, this is what the insurance companies look at. Can you get in and out of bed doing the transferring? Can toileting and using the bathroom, bathing, dressing, eating? Those are the things that you need to make sure that you can do to take care of yourself. And if you get to the point you can't do 2 out of 6 of these activities of daily living, then that's when a long-term care insurance policy would start to provide benefits to you if you have those policies in place. Of course, the other one is cognitive impairment. And we see this with the dementia, Alzheimer's, those types of issues. If you can't do those of course are going to affect your activities of daily living, but it's an additional um, diagnosis that if you have a cognitive impairment, then you're going to need that long-term care. So when we look at long-term care, it's how do we pay for it? And there again, if you planned ahead, that's going to be one thing. If you haven't planned ahead, what happens? Well, if I look at it, a lot of people will talk about self-paying, and I'll hear this self-insure, but self-insure makes it sound like you have insurance. Self-pay means you're going to access your money, your accounts, your retirement funds, whatever it is, and you're going to create, income, cash flow to cover those payments. The problem with self-pay is a lot of time the money during retirement is coming from qualified retirement accounts. Well, as you access that money, the problem is you will have to pay the taxes on those retirement accounts as you access that money. So if you need $100,000 for your care, you're going to have to take out enough above that, 150,000, whatever it is, to be able to take out that gross amount, pay the taxes, and then use the rest for covering those long-term care needs. The problem I see in a lot of these things, if we're dealing with spouses, is the person that needs long-term care may be using up all those assets, and therefore there's not enough retirement assets left for the well spouse. Of course, if you don't have the assets or income, you can go to Medi-Cal or Medicaid. I don't look at this as planning. This is, hey, you don't have the assets that you need. Now the state's going to step in and provide those benefits. Of course, finally, we get to insurance. And if you think about insurance, it's basically coming out and leveraging your money. So you're going to put in money into that policy that allows you to now push that burden, that risk off to the insurance company to cover your long-term care needs. Now, when I look at this and talk about leveraging, we want to make sure we understand the insurance. If I go back to traditional long-term care coverage, it was use it or lose it. So you might have paid 100, 200 or more thousand into this policy that created these long-term care benefits. However, if you didn't ever access that, you didn't ever need to cover the 2 out of 6 activities of daily living, you didn't get dementia, you died of a car accident, you died of a heart attack, the insurance money, company gets to keep your money and you never get benefits and nothing ever gets paid to your family. Now, the newer policies, the newer long-term care policies, we have what are called hybrid policies. The hybrid policies have an element of life insurance attached to them so that you can actually be building up cash value in those policies. You will create a death benefit. And what I like, whether it's a life insurance or annuity contract, that's the basis of these hybrid policies. Now, if you don't ever use that money, that death benefit will pass on to your heirs, to your family. And now it's either you're going to use this money for care, you're going to take out the cash value and use it for something else, or you're going to pass it on to your family. So the chance of use it or lose it has gone away. And you can really leverage that money to cover those expenses that may or may not happen to you. Statistically, it's a high number. Statistics, throw those out the window, because if it happens to you, you need to have that budgeted into your retirement so that you know it can be paid for, especially if we're talking, spouse or significant other, that you're not, there again, if you're the one needing care, you don't end up using all of that money that may be needed for the well spouse to continue on the rest of their life. So it's some balance in there. Now, if I look at this, it's know your insurance options. If insurance is a possibility and something that you want to look at, we want to take into account what those goals could be. Now, first of all, there can be a death benefit need. If I'm looking at insurance, irrespective of long-term care, do we need a death benefit, to pass on to your, wealth to your surviving heirs, business, spouse, whatever? And that's the basis of every insurance policy, every life insurance policy. If I look at it and say, okay, do we want to build cash value? Now, death benefit, okay, we can build a policy that is just for death benefit. And now we can add the component and say, now we're going to build cash value, whether that's in an index policy, whether that's in a whole life policy or a guaranteed UL policy. All of these different policies have an element of cash value to them. The nice thing about the cash value is if you ever need the money, there again, if it's designed properly, you can access that money while you're alive, tax-free, if it's there again designed properly, and get that tax-free money to help you in your retirement years. Use it, during your working years if you need to, but it's there to use when and if you need it. Now, finally, we start looking at long-term care. Do we need long-term care as part of your planning, or do you want long-term care as part of your planning? Now, with the long-term care, there again, we can get a policy that's focused on long-term care. Or a lot of times what I see is we need an element of all of this. As I talk to clients, they love the death benefit. So it's not a use it or lose it. I know that I'm going to pass this on, at least pass something on to my heirs, especially if I don't ever use the money. If I need the what if I need that extra money for retirement, that I want to, enjoy the retirement years, maybe take some extra vacations, maybe take the trip around the world, maybe, do some additional, touch-ups to your home, those types of things. Now we've got that cash value element growing inside that policy. There again, if you need it, when you need it, you can take that money out. Finally, in that life insurance policy or a hybrid long-term care policy, we can cover your long-term care needs. There again, if you can't do two out of 6 activities of daily living and you need care, what's nice, whether we have a life insurance policy with a long-term care rider, a life insurance policy with a chronic illness rider, or we're using the new hybrid long-term care policies, all of these will provide a benefit to you tax-free to be able to cover those long-term care expenses. So as you start looking at this, it's nice to have all 3 of these covered as part of your retirement plan. And it allows you to make sure you've got buckets of money, you've got your qualified plan money, you've now have tax-free money, but more importantly, you've got that long-term care, potential long-term care expense covered in a more efficient manner. So as you look at it, the best thing is you've got options. And part of the planning process is to find the option that fits best for you. And these can all be custom designed for your needs at the funding level that you want and at the benefit level that you want. So I appreciate it, everybody getting on. If you have questions, always feel free to reach out and we can discuss this more. Again, thanks again. We'll talk again next week. Thank you. Bye.